Hammond Manufacturing is a stock that my portfolio is currently in love with. Fasten your seatbelts, folks. This is going to be a good one. Back in 1916, O.S. Hammond & Son began in Guelph, Ontario, and they evolved into a significant supplier of electrical products, radio sets, transformers, and enclosures. By the 50s and 60s, the demand for their products was surging, and they expanded into the U.S. and international markets. In 2001, they spun off a significant part of the transformer part of the business, which became Hammond Power Solutions. HPS.A is also another stock I do like a lot. Today, Hammond Manufacturing is simply a powerhouse, providing very high-quality products, exceptional service, and of course that overall commitment to client satisfaction. They have had the right attitude, and their success thus far has certainly demonstrated that. Join the conversation. Let us know in the comments if you are invested in either of the Hammond stocks. Your participation is of course well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. Hammond has a sweet spot in the market for their electrical wares, and that can bring with it some assurances of safety. With an ongoing record of some very nice returns, it is easy to just want to jump in and gobble up some of those shares. Before, of course, we do that, we really do need to take a deep dive into their fundamentals, and as always, to do that, we need to visit our good old buddy, Mr. Math. Starting with some surface data, their market cap comes in at $89.54 million, and they have a very average beta of 1.04. Their earnings per share, they come in at 1.52. Now, over the last 3 years, their EPS has grown by an average of 36% per year, and I can't say how much I really like that. They have a price to earnings ratio of 5.20. The industry average is 10.30, so that looks pretty good. In fact, when we look at some of their peers, Buhler Industries has the best at 3.70, and if we go all the way up to Tornado Global Hydrovacs, they've got a PE ratio of 20.50. When we look at their price to book ratio, it comes in at exactly 1. The average for their peers is 2.1, so that's looking good too. Return on equity, 21.06%. So far, I am happy with what we are seeing. When a company is growing their EPS, it is typically a very healthy sign. So let's peel back another layer and take a look at their cash. When it comes to their revenue, that comes in at $237.60 million, and their earnings come in at $17.20 million. Now, those earnings have experienced a growth of 28.6% over the last 5 years. Now, their free cash flow, this one is negative. It comes in at negative $13.13 million. I would really have liked to seen this in the positive. Now, let's take a look at the operating cash flow. Much better, $55.03 million. That sure does make up for the negative free cash flow. When we look at their fair value, their current value comes in at $7.90, and using a discounted cash flow model, we get a fair value of, well, 90 cents. That's a little low, and that makes them overvalued by 778%. This one surprised me, as their price to earnings and price to book ratio kind of implied the opposite. However, sometimes this can be way off with a company that is experiencing rapid growth, so we may need to take this value with a grain of salt. Overall, their cash situation is not bad at all, so let's go a little deeper and take a look at those returns. When we look at their dividend, we can definitely see this is not a passive income stock with a very small yield of 0.759%. That is paid out semi-annually in the amount of 3 cents per share. Their payout ratio, very, very low, 3.95%, so it's not even a question as to whether this is sustainable or not. Looking though at their return on investment for the 3 year, their price rose from $1.85 to $7.90. That is a return on investment of 327.03%. Factoring in those mini dividends, we actually do bump it up a little bit to 335.68%. This is, well, it's fantastic. Some great looking returns for sure. Let's take a look at their 1 year. The price rose from $4.13 to $7.90. This is a return on investment of 91.28%. Factor in the dividends, we get a total return of 92.74%. 2023 looks pretty similar. Their price rose from $4.12 to $7.90. That's a return on investment of 91.75%. And a total return after we add in the dividends of 93.20%. I recently discovered this company and bought into HMM.A, and my investment is up by 29.29% for a profit of $596. I also bought into the other Hammond company, HPS.A, and it is up 24.49% for a $732 profit. Did I mention that I love Hammond? We still have one more layer to pull back, so let's dive into their debt. Their total debt comes in at $45.34 million, and they have a total equity of $90.34 million. That gives them a debt to equity ratio of 50.2%. That is not too bad. However, that debt to equity ratio has increased from 45% to 50.2% over the past 5 years. They have room to take more debt if they need to, but I would still love to see the needle moving in the opposite direction. As for their cash and cash equivalents, that does come in at $1.61 million. Let's look on the short term. They have assets of $103.87 million, liabilities $70.15 million. Nothing wrong with that. On the long term, their assets come in at $79.03 million, and their liabilities come in at $22.42 million. Once again, I like that. Overall, this is not a bad debt situation, though it is one moving in the wrong direction as their debt has grown from $26 million to $46 million in the last 5 years. In a worst case scenario, if their creditors wanted them to shore up their balance sheet, they would need to, well, they would probably need to dilute their shares to make that happen. Chances are that won't happen, but it is always good to be aware that it can. I do like that their short and long-term assets cover their liabilities. Also, their current debt is well covered by their operating cash flow, and the interest is also well covered by their earnings before interest and taxes, or that good old EBIT. So what is the final verdict? I love this stock, so remember, there may be some unintended bias in my verdict. I hope there isn't, but you always want to know where the source stands personally on the issue so you can take that into account. This is a company that has been tearing up the profit sheet for quite some time, and sometimes that can be a con, as you have to wonder if they are done and how much growth can they have left in the tank. In the case of Hammond, I do think they still have some gas left in that tank, and I do like their overall prospect for some decent long-term gains. This is a company that is doing things right for the most part. You can argue that they are playing a little bit with the debt, and that would be a valid concern. I don't think we'll ever get into a creditor crunch like I mentioned before, but it should still hold a wee bit of weight when it comes to your decision on whether or not this is the right stock for your portfolio. If you are a passive income investor, this is simply not the stock for you. The dividends are very small, and this is not the stock to look at for generating income as dividends. I think it is a superb pick for the midterm growth or total return investor, and a solid choice for the long term. Their growth will peter out eventually. That's the difference between mid and long term. If you love this stock, be sure to also check out HPS.A, as they are in a similar profit track. Also be sure to do your due diligence before you buy any stock you hear about on the YouTube. Hey guys, Wealthsimple has a deal going on until September 13th. They have quadrupled their sign-up bonus, so times the old one by 4, and you can earn between $20 all the way up to $12,000 free just for trying them out. I will pin the link you need to use to get that deal in the comments below. Full disclosure, the channel makes a little money too when you do that. Keep the learning going. Watch my video on material stocks linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.